Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. Recently, I've spoken a lot about the falling wedge pattern formed over March. The actions from that are all about done, so it is time to concentrate on the other patterns. The V bottom formed over March and April, and the rising wedge pattern formed over April itself. That also made up the second part of the V bottom. And the V bottom has already reached its topside target. I spoke about that last week, and about how in the process the market pushed up through the congestion from March to June 2013 and March to May 2014, all between 675 and 720. Well, let's just say it pushed up like it wasn't there. Anyway, that was one pattern. The second is the rising wedge pattern. Let's look at the target on the upside for this pattern. The provisional target X4 is in the 722 area. This was just about the previously mentioned congestion from 2013 and 2014 and close to the October 2013 high at 720 and the March 2014 high at 725. This target was achieved this past Monday. Now, there's something I'd like to note from my commentary from last week, which may go some way towards explaining what has happened since. I said last time, and I quote, "One final point about wedges generally, and a valid one here for the falling wedge and maybe the rising wedge as well. Market show a weakness in the opposite direction some 2 weeks after the breakout. So in this case, from around the 4th of May. That's something to watch out for." End of quote. So the big move higher earlier this week, two things are noteworthy. Firstly, Monday through to Wednesday made a 3-day bearish pattern known as a bearish evening star pattern. It's not that unusual in markets that peak or have finished their fall. It's also not perfect, but it is still there. Secondly, it goes some way to explain the lows this week. We had a shallow bullish shift pitch hawk for the early December 2020 to late March 2021 action. The market broke up through the upper time, currently at 717 on Monday, after 2 attempts at breaking it late last week. The lows late this week, especially yesterday's reactionary bullish piercing line pattern, may be basing themselves on the shadow of this pattern, or this upper time, one that is usually retired when fully broken. I've seen such actions elsewhere, and I'm not satisfied, or not that surprised, let's say, to see this happen. So what we're left with is wondering if this 3-day bearish pattern will trump the bullish shadow, and what will happen on the 4th of May or soon thereafter. Chicago corn. Since reaching target X at 558 for the combined bullish roof pattern and the descending triangle pattern that formed part of the roof pattern, prices have continued higher, filling in the previously highlighted gap 586 to 590, and since last week filling in the higher 610 to 646 gap from May to June 2013. I spoke last week about a new bullish pattern that seems to have merit. I said last week, and I quote, "There is one final point I'd like to discuss. I've drawn a fresh bullish Andrews pitch for the January to March action. I was tempted to base it from the earlier December lows, but I realized it made seemingly little difference, just a slightly more acute angle. This new pitchhawk has merit. The middle time, which is currently at 616, is the base of yesterday, that's last Thursday's interesting bullish open and close along White Mariposa. So we're currently in between the middle time and the upper time, which is currently at 674. Anyway, that's the end of the quote. Well, since then, prices have continued higher, and last Tuesday they pierced the upper time. However, there was no close over it. Indeed, the market made an indecisive spinning top right at the height of the market. I now believe that this bullish pitchfork, and especially the upper and middle times, may be showing a bullish angle of attack, a less steep angle than this market has recently exhibited. We have resistances overhead. You can easily see them on the daily chart. The one I would like to note above most is the March 2013 high at 719. This of course depends on the upper tie being truly broken, of course. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.